Good morning, everyone. Today is the 19th of June. It is Juneteenth holiday. Going to be no trading today in the stock market. Futures markets will likely trade a bit. So we'll see how that is going. Right now, pre-market, the S&P is down about 0.75%. The NASDAQ is down about 0.8, almost 0.9%. And we're looking at a broader downturn in the market. Let's come over here and take a look at the ES real quick. You can see we've got this moderate breakdown taking place. And again, because we got the holiday, and then we've got a little bit of trading tomorrow, obviously on Friday, and we've got the news in Iran. There's a lot that could actually come down over the next 24 hours. So, stay cautious. Hopefully you were able to protect your positions and hedge a bit before this holiday shortened kind of week. And remember, we're outside of that channel. You can see this kind of channel moving up across here, really kind of here. And being outside of this channel already, which is the flagging channel, you can carry it out here if you want, but the tighter channel really is right down there. Because we're outside of that channel and we've already reached this kind of excess phase peaking top, rolling up, coming back down into this flag, and we're rolling outside of that flag right now. The real high likelihood pattern right now, unless we get something really powerfully strong to drive the markets higher, would be a rollover and trying to retest these lows. And these lows would be down in this area just as a target. Obviously, we have the ultimate high back over here, which again, I've been referencing. I never really thought we would get up this high, and I can explain it to you in Fibonacci terms right here. Getting up into this area, the Fibonacci trigger level, was likely. So back over here, as I rolled into my original position, thinking the markets were going to go down, gapping up into this level set us up into a fairly solid topping pattern right over in this area. We rolled higher, speculation has pushed us higher, and now we're up in this area. Really, a breakdown below this level would be a fairly good sign that we are going to attempt to move down into this lower Fibonacci trigger zone down here. That's the 0.25 to 0.175. So in reality, folks, failure up at this area would be a very strong move, potentially to the downside. Let me get rid of some of these things. These are some of my earlier predictions. And now you have to understand that we also have this move from this low all the way up to this high. And what we would be looking for again is those failure zones, which would be in this area here and in this area here. Notice how they kind of align. So we have an area right in this area. Whoops. Oh, much better. Look at that straight line. Geez. Someone smacked me in the head this morning and gave me the ability to draw. And that level. So let me make them bright red and bright red. So really, folks, we're looking at potentially this 5,800 level on the ES, which would equate to about 579, 575 on the S&P, moving down here into this 5164 level, which would equate to about 515, 520 on the S&P. And that's the range we're looking for. Once we get below this area, I think there's a pretty good chance we could move, strongly down here to the downside. Just a matter of, do we get that rollover? Do we get that breakdown, or do we consolidate up into a rolling consolidation before attempting to break higher. We'll see how it plays out. I mean, right now there's a lot of uncertainty going on. The Fed came out just yesterday, basically said that inflation concerns are there, uncertainty is there. They're not, they indicated potentially 2 rate cuts, potentially. I think it was next year, but my opinion is if inflation continues to be persistent, then the Fed's most likely going to be raising rates, not cutting rates. So we will see. They're being optimistic, in my opinion, saying that, well, we're hoping for a broader slowdown in the market, but they're not seeing it yet. And it's going to be a matter of time to see what actually happens, to see how this plays out. Okay, so for the cycle pattern today, we're looking at a gap reversal, which, again, watch the futures in counter trend mode. We are in a warning, short-term, bullish, long-term, explosive price action. And then on Friday, we have a pause bar in trend mode, moving into this time shift, gap close -1, gap trend, and then a crush pattern on Monday. So we could move into kind of a consolidated breakdown phase maybe on Friday. We'll see. And then we have like flat down, counter trend rally, which is a downtrend, and then maybe a bounce upward on the 27th, right before, again, a gap potential crush on the weekend, Sunday, gap reversal in counter trend mode, a gap potential, top resistance. This is really topping data leading to potentially a fairly solid breakdown here into early July. So we'll see. Okay, so gold and silver are, we had seen a pretty big breakdown in gold and silver yesterday. It really is related to the Fed and a bit of unwinding. It's nothing, in my opinion, overly serious as long as we stay above this 3,300 level. I think gold is making a moderate pullback, going to go to 4-hour here, and trying to really just meander through this consolidation before making a big move to the upside. Same thing with silver, pulling back off the 37 level, still very high, 36.30. Really, I think it's just consolidating and trying to make a move upward. So, I am expecting gold and silver to try to rally up on out of this, especially with this uncertainty. Gold and silver need to hedge the global market risk, and that's their primary function, is to hedge global market risk. So ultimately, guys, I continue to see this as an uptrend. This 36 level, let's call it right here on silver, it's pretty solid support. We also have pullback down here to 35.20, which is pretty solid support. And like I said, between gold, you have this 33.30, 33.20 area as very solid support. And I believe this 3,400 level is also going to act as solid support and resistance. So we'll see how it plays out. The cycle pattern for gold and silver is a gap potential today in carryover mode. We are in bullish breakout, bullish mode. So we would be looking at a move into the top resistance pattern on Friday. To me, that means that we could be looking at kind of if we do get a move today, we could be looking at a pretty strong upward trend today and tomorrow in metals. We will see how it plays out and what the news is on this holiday. Remember, futures will likely trade today, and stocks will be halted. Stocks will not trade today. Okay, lastly, we come over here and take a look at Bitcoin. Bitcoin is rolling through my consolidation pattern. Let me get rid of some of these lines over here. We're really, consolidating here, flattening out. Bitcoin's at 104,674. Very narrow consolidated channeling. We've got to watch this 103,500 and then this 100,450. Again, same setup I showed you last week and the week before. We're rolling through this flagging pattern. We will see if we get any big volatility over here. You do have that upper resistance at 109,600 and the lower support at 103,500. And again, we'll just see how this kind of plays out. Ultimately, I think we're rolling downward. And I think we're going to be looking at a pretty big breakdown in Bitcoin. I really do think that we could see the entire market move into a consolidated kind of a downward cycle phase. But again, I could be wrong. So we're going to play it as it comes. Remember, today's a holiday. I'm going to be working, but I'm going to be working on side projects, my book, and other things. And I will keep you hopefully updated with what's going on. Okay, back over to the S&P. Let's see how the markets move today. Again, holiday, futures trading, could have a lot of news out of Israel and Iran. So, could be a quiet day for us here in America, not having active markets on the holiday. But it could be very active in the futures market. All right, guys, go get some today. Hopefully you're hedged and ready for this. Talk to you guys later.